I'm recording this from the States, but by the time you hear or see this, I'll be on the ground in Hamilton, Bermuda, at the Bermuda Digital Finance Forum, the same week that the Senate Banking Committee is set to mark up the Clarity Act, also known as the Market Structure Bill for Digital Assets in the United States. And that timing is really serendipity. As Bermudian Premier David Burt put it last week at Consensus in Miami, you cannot regulate out failure, but you can put in place the items which allow responsible innovation to happen. 8 years into Bermuda's digital asset regulatory experiment, that reads less like a vision statement and more like an actual status report. While Washington debates, Bermuda deploys. And today we are connecting those two dots. I'm Dr. Tonya M. Evans, and this is Confidently Crypto. Hey everybody, welcome back to Confidently Crypto. I am your host, Dr. Tonya M. Evans, digital asset regulatory strategist, board member at one of the largest digital asset companies in the world, lawyer, professor, and author of Digital Money Demystified. This show exists to help you, whether you're a crypto curious investor, a legal or financial professional, or someone who just knows this technology matters but doesn't know where to start, in order to navigate the digital asset economy with clarity and confidence. No hype, no jargon, just the real story. Quick programming note before we dive in. Confidently Crypto has officially moved to Tuesdays. Same show, new day, new episodes every Tuesday going forward. If you subscribe wherever you get your podcasts, the new episodes will land in your feed automatically, but be sure to subscribe and tell a friend to tell a friend. Now, this is one of those rare weeks where the timing of two completely separate stories tells you everything you need to know about where digital finance is actually heading. On Thursday, the Senate Banking Committee will mark up the Clarity Act in Washington. On the same day, Bermudian residents and professionals will continue to lean into the innovation happening on island. One country is still arguing about whether stablecoins are allowed to compete with bank deposits. The other has been quietly answering the question for 8 years. And we're going to walk through both. What just happened with Western Union's launch of its own stablecoin last week, what it all means for your money and your professional positioning, and also a piece I published on LinkedIn this week called While Washington Debates, Bermuda Deploys, that really lays out the longer arc of what we're covering today. But let's start as we always do with this week's state of crypto. First, and most importantly, the Senate Banking Committee has officially scheduled the Clarity Act markup for Thursday, May 14th at 10:30 in the morning, Eastern Time. CoinDesk, CoinGate, and a number of outlets have reported. The committee will consider the Digital Asset Market Clarity Act of 2025, the same bill that passed the House 294 to 134 last July. Now, Section 404, it's a compromise on stablecoin yield, which was brokered by Senator Tom Tillis, Republican of North Carolina, and Senator Angela Alsobrooks, Democrat of Maryland. And both members, are members of the Senate Banking Committee. And this is the framework that broke the 5-month logjam in order to advance the bill forward. Second, the banking lobby formally pushed back on the compromise last week. The American Bankers Association and other banking trade groups submitted comments arguing the Section 404 text falls short of fully prohibiting yield-like behavior on stablecoin balances. Senators Tillis and Alsobrooks responded in a joint statement on May 5th saying the deal is final, in their words, and we respectfully agree to disagree. This was actually released by a tweet on X, formerly known as Twitter. Senator Cynthia Lummis, Republican from Wyoming and the chair of the Senate Banking Subcommittee, on digital assets, said in her own May 4th statement that we are closer than ever to getting the Clarity Act across the finish line. Chairman Tim Scott, Republican of South Carolina and the chairman of the Senate Banking Committee, has publicly committed to passage before the August recess. Prediction markets, which aggregate real money bets on policy outcomes, have repriced enactment odds upward into the over 60% range after the compromise text dropped, up from the low 40s before. Another interesting point to note, Western Union officially launched its USDPT stablecoin on the Solana blockchain on May 4th. The launch announcement confirmed Anchorage Digital Bank, the first federally chartered crypto bank in the United States, as the issuer, with Fireblocks providing the wallet and settlement infrastructure. The initial pilot corridors are the Philippines and Bolivia, two of Western Union's highest volume remittance markets. So we're going to spend significant time on what this means later in the episode, but this is really, really big news. And fourth, where I'm headed by the time you hear this on Tuesday, I'll be on the ground in Hamilton, Bermuda for the Bermuda Digital Finance Forum hosted by SALT in partnership with Penrose Partners. Shout out to G. Clay Miller and also the sponsors of that effort, Coinbase, Circle, Stellar, and Kraken. Now, the forum dates are May 11th through 14th. And the 14th is the Digital Payments Workshop and Market for Bermudian Residents, which the government of Bermuda is providing free tickets for. Hosted on the same day, the Senate Banking Committee will be marking up the Clarity Act in Washington. And that is the parallel this episode is built around. Now, let's get into today's main event. Let me pick up where the May 4th episode left off briefly for new listeners and then forward into what has happened since. The Clarity Act, short for the Digital Asset Market Clarity Act, is the bill that would resolve the long-running turf war between the Securities and Exchange Commission, or SEC, which oversees stocks, bonds, and other investment securities, and the Commodity Futures Trading Commission, or CFTC, which oversees commodity markets like oil, wheat, and gold. The House passed its version last July with 294 votes. The Senate Agriculture Committee passed its version in January. And the only thing standing in the way of the Senate Banking Committee version has been one fight: stablecoin yield. Actually, up until now, in addition to stablecoin yield, now there's a focus on ethics. Talk more about that in a moment. But a quick definitional note for new listeners, because the difference between yield and interest really sits at the heart of this whole debate. Interest, in the traditional banking sense, is what a bank pays you for letting them borrow your deposit. Yield is the broader term for the return on any investment expressed as a percentage. The crypto industry has been offering payments on stablecoin balances and calling it yield. The banking industry has been arguing those payments function economically more like interest on a deposit. Section 404 of the Clarity Act is the line that Congress is drawing between the two. The Tillis also Brooks compromise text on Section 404 dropped late Friday night, May 1st. And here is what it actually does. It prohibits digital asset service providers, the bill calls them actually covered parties, from offering rewards economically or functionally equivalent to interest on bank deposits. The prohibition is broad by design, with anti-evasion language meant to close workarounds through affiliates and structured arrangements. The sit and earn model, where you simply park stablecoins on a platform and accrue payments just for holding, seems like it's going to be over. But activity-based rewards tied to bona fide platform usage, that's actually preserved. So think cashback programs, transaction-based incentives, rewards for actually using stablecoins in commerce. Those remain in the toolbox. The text directs the SEC, CFTC, and Treasury Secretary to issue joint rules within 1 year, defining a non exhaustive list of permitted activities expected to include payments, transfers, market making, staking, governance, and loyalty programs. Now, this shift represents something really fundamental. The economic model for stablecoin platforms now mirrors payment processors, not banks. The platforms that compete on transaction value rather than deposit interest rates will be the ones building durable products. The banking industry asked for more, but it didn't get it. The American Bankers Association comments submitted May 5th argued the Section 404 text could allow exchanges to engineer products that mimic yield through carefully structured loyalty or membership tiers. The senator's response was, in essence, the deal is final, saying in the tweet, "We respectfully agree to disagree." That's was shared by Tom Tillis. That phrase from the joint May 5th statement signals that the negotiation period is over. And now we move from talking to deciding. The next 30 days are about advancing the bill, not amending Section 404. And here is the calendar that matters. The Senate Banking Committee markup happens Thursday of this week, May 14th at 10:30. If the bill clears committee, it then needs reconciliation with the Senate Agriculture Committee version that passed in January, a 60-vote floor vote in the full Senate, and then reconciliation with the House version that passed back in July. And then finally, the president's signature if all goes according to plan. The Senate breaks for Memorial Day recess on May 21st. And Senator Bernie Moreno, Republican of Ohio, and also a member of the Senate Banking Committee, has really been blunt that the bill needs to clear committee before Memorial Day in order to have a realistic path. Chairman Tim Scott has now publicly committed to passage before the August recess. So the political will is aligned, but the clock is the variable. And the takeaway for you, the markup happening Thursday is the most consequential moment in U.S. crypto policy in a decade. And whether you are an investor, a professional, or someone watching from the sidelines, this is the week to actually pay attention. And now to the bridge that this whole episode is built on. While Washington debates, Bermuda deploys. And I want to start with something I wrote on LinkedIn last week because the framing matters. 8 years ago, Bermuda's bet was that a small, competent jurisdiction could write better digital asset rules than larger powers. And this week, the bet escalates. The question is no longer whether the framework works, it's whether a national economy can run on it. And to understand why that question matters, you need to understand who is actually leading this initiative and what they have already built. Premier David Burt is Bermuda's 13th and youngest premier, elected at just 38 years old. He holds a Bachelor of Business Administration with a double major in Finance and Information Systems and a Master of Science in Information Systems Development, both from George Washington University. Before politics, he co-founded and served as lead developer of an award-winning mobile app called Hitch that let Bermuda residents hail taxis. The head of state designing a national on-chain economy is a former software entrepreneur with formal finance training applying his own toolkit at sovereign scale. His policy posture is technical, iterative, and skeptical of regulatory overreach just for its own sake. And I've been watching this work develop for years. Premier Burt has served as a guest speaker in my blockchain, cryptocurrency, and law courses in past years. My prior service on the Bermuda Global FinTech Advisory Board really gave me a front row seat to how seriously Bermuda takes the partnership between policy, industry, and the people who will live inside whatever framework gets built. So when I tell you this is a serious and consequential experiment, that is not a tourist's observation. That's a working assessment over these years. The legal foundation is the Digital Asset Business Act of 2018, known as DABA. And it is now in its 8th year as the legal substrate for digital asset business in and from Bermuda, administered by the Bermuda Monetary Authority, or BMA. And that single regulator architecture matters, where U.S. crypto firms navigate a crowded regulatory alphabet soup of the SEC, the CFTC, FinCEN, the OCC, 50 state money transmitter regimes, and 50 attorneys general. Bermuda's licensees engage one body with deep institutional credibility across insurance, banking, investment funds, and now digital assets. And the numbers tell the maturation story. 39 licensed digital asset businesses, 14 innovative insurer general businesses, 8 new digital asset licenses issued in 2024 alone. And among the licensees, you'll find names you already know, including Circle, Coinbase, Kraken's parent company, Payward, Apex Group, IG International, Stablehouse, XBTO, and Zero Hash, the firm that now powers stablecoin payments for Bermuda Air, the national airline. The digital assets business custody of client assets rules, finalized back in 2025 and in force since February of this year, tighten segregation, reconciliation, and third-party custodian due diligence requirements, directly addressing the structural failures that produced the 2022 and 2023 crypto insolvencies. So that's the foundation. And here's what just happened on top of it. In January at the World Economic Forum in Davos, Premier Burt announced Bermuda's intention to become the world's first fully on-chain national economy, partnering with Circle and Coinbase to deploy stablecoin payments across government agencies, integrate tokenization tools at local financial institutions, and launch nationwide digital literacy programs. And last week at Consensus Miami, Premier Burt announced 2 additional steps. The Bermuda Cabinet has approved a framework allowing the government of Bermuda to accept and invest in digital assets within a defined regulatory structure. That is sovereign level adoption, not just facilitation. And the existing FinTech Development Fund is being modernized to accept digital asset contributions from industry alongside government funding, creating a dedicated capital pool to grow Bermuda's on-chain ecosystem. Premier Burt framed the broader mission like this. The goal is to ensure that Bermudians are not just spectators in the future of digital finance, but owners and builders and active participants. That framing is the entire point. The on-chain economy is not being built around Bermudians, it's being built with them. The live deployment is what makes this matter. Last year at the 2025 Bermuda Digital Finance Forum, Circle and Coinbase airdropped 100 USDC, the dollar-pegged stablecoin issued by Circle, to every attendee for use with newly onboarded local merchants. A fully compliant pilot that gave everyday Bermudians their first hands-on experience with stablecoin commerce. And this year on May 14th, the same model is running again with Digital Payments Workshop and with the Digital Payments Workshop and Market, with the government of Bermuda providing free tickets so residents can participate. And that format where institutional dialogue and community development happen on the same campus in the same week is really the model that the rest of the world should be paying attention to. Now, here's where this connects directly to the U.S. While Bermuda has been deploying at the policy level, Western Union has been quietly building the equivalent at the private sector level. And the timing of Western Union's launch cannot be more relevant to today's conversation. Western Union officially launched USDPT on May 4th on the Solana blockchain. It's issued by Anchorage Digital Bank, the first federally chartered crypto bank in the United States, meaning a national bank licensed by the Office of the Comptroller of Currency, or the OCC, in order to provide digital asset services under the same regulatory standards as traditional banks. Fireblocks is providing the wallet and settlement infrastructure. Now, the initial pilot corridors are the Philippines and Bolivia, two of Western Union's highest volume remittance markets. The first phase is back-end agent settlement and replacing parts of the SWIFT messaging system, which is the global interbank network that banks have used for 50 years to move money between each other. It's an electronic messaging system. Western Union has hundreds of thousands of agent locations across more than 200 countries, and settling with those agents through USDPT tokens on Solana is much faster, far cheaper, and works around the clock 24/7, 365 instead of on banking hours. Now, the consumer facing product is called Stable by Western Union, launching in more than 40 countries later this year. And according to Western Union's announcement, it will let consumers hold stablecoins and spend them through the company's existing payment network, and really targeted at what Western Union calls inflation sensitive markets in particular. And here's why Western Union and Bermuda belong in the same episode. Both are demonstrating in real production what happens when the regulatory framework gives clear permission to deploy. Bermuda did it through national policy under DABA. Western Union did it through a federal bank charter, regulated custody at Anchorage, and a public blockchain. Both are doing the same thing the United States is still arguing about, which is putting dollar pegged digital infrastructure into the hands of ordinary people in a fully compliant way. The contrast that matters is this: Bermuda put stablecoins in everyday hands before scaling. The US is still arguing about whether platforms can pay rewards on them. Western Union, operating inside the US regulatory perimeter, is building the bridge between the two. The Clarity Act, if passed, is the legislation that determines whether the next 10 Western Unions and the next 10 Bermudas get built on American soil or somewhere else. So the takeaway for you: Bermuda is not just a crypto hub. It is live proof of concept for what US policy could enable, but hasn't yet. Western Union is what US private sector innovation looks like when it operates inside a coherent regulatory framework. And the Clarity Act decides whether that becomes the rule or the exception. Now to the most actionable part of this episode: what all of this means for you, whether you are an investor or a professional. If you are an individual investor, here are the things that change once Section 404 becomes law. Passive stablecoin yield is off the table federally. The savings account style stablecoin products that some platforms have offered, where you simply deposit and earn returns just for holding or hodling, those are going away. Part of your strategy was parking stablecoins for passive yields. You need to understand that revenue stream is on a regulatory timer. The activity-based rewards survive and will be defined by joint rulemaking from the SEC, the CFTC, and Treasury over the next 12 months. Again, assuming this passes in its present form. So watch for products that reward you for using stablecoins in payments, transfers, and on-platform activity. The platforms that compete on transaction value rather than deposit interest rates will be the ones building durable products. And the 12-month rulemaking window is where the real boundaries actually get fortified. The statute draws the line between yield and rewards, but the rules will determine exactly where that line falls. And if you're a professional, whether you are a business owner, an operator, a financial advisor, or a lawyer, there are things you need to be doing right now, not just waiting for after the bill passes. The economic model for stablecoin platforms now mirrors payment processors, not banks. So if your product roadmap, your client's product roadmap, your investment thesis was built around yield, it really needs to be rebuilt now around utility. The companies that will succeed under Section 404 are the ones whose value proposition doesn't depend on functioning as an unregulated high yield savings account. And jurisdiction still matters. And the Bermuda framework is the clearest illustration of that point. As BMA Chief Executive Officer Craig Swan has framed the strategy in formal memoranda of understanding with international counterparts, the work is about supporting innovation and enhancing capabilities and resources through international collaboration. And that posture of regulators actively engaging across borders to make compliant innovation portable is something U.S. clients increasingly need to factor into their planning. The European Union's markets and crypto assets regulation, known as MiCA, the United Kingdom's Financial Services and Markets Act amendments, Singapore's Monetary Authority of Singapore framework, and the UAE's Virtual Asset Regulatory Authority all create a multi jurisdiction compliance landscape your clients are operating across right now. So, the lawyers and advisors who can read across these frameworks are the ones building global practices. The rulemaking window opening after enactment is one of the most consequential periods of crypto policymaking in a decade. The statute sets the frame, the rules determine the outcome, and your clients need guidance during this 12-month window, not just after the rules are finalized. And the professional position to provide that guidance is the one paying attention right now. For everyone listening and watching, the single biggest mistake you can make right now is waiting. Clarity Act, the Section 404 compromise, the Bermuda model, the Western Union deployment, these are not future events. These are literally happening this month. The professionals, the investors, and the businesses that engage now are the ones who will be positioned when the window for advantage actually closes. And the ones who wait until the rules are written will be reading the news and wondering how everyone else got there first. As Section 404 becomes the law and activity based rewards become the new normal in stablecoin economics, the tax reporting around them is going to look different from what most people are used to and all be captured on Form 1099-DA, which stands for digital assets. Cost basis tracking, which is keeping accurate records of what you originally paid for an asset so you can correctly calculate your gain or your loss when you sell or convert it. Categorization of activity based rewards versus passive holdings. The traditional tax software most people use is just not built for this. And that's why I recommend CoinTracker. It connects directly to all of the platforms and wallets that you actually use. It calculates cost basis automatically, generates the tax reports your accountant needs, and it does it across exchanges, wallets, and on chain protocols. So you aren't stuck reconstructing a year's worth of transactions from screenshots in March on an Excel spreadsheet. So get started at proftanyaevans.com/partners and get more information so that you can track everything seamlessly and efficiently. Now, let me speak directly to the law students and the early career attorneys listening or watching, because this summer is the moment. Everything we just walked through, the Section 404 compromise, the joint rulemaking window opening across CFTC, SEC, and Treasury, the multi-jurisdiction landscape from Bermuda's DABA framework to the European Union's MiCA to the UAE's Virtual Asset Regulatory Authority. This is the regulatory architecture being written in real time. The lawyers who understand it from the ground up are the ones who will be retained, promoted, and trusted as the market continues to mature. And that is why I built Web3 Ready for Law Students, an intensive. It's a 4-week live summer cohort delivered online that compresses what I teach over 14 weeks during the academic year at law schools across the country into really a high touch, transformation focused format. Crypto law foundations, smart contracts and tokenization, compliance, custody, and client advising frameworks, career strategy for a practice area that did not exist 5 years ago. We will have live sessions, downloadable frameworks, a peer cohort community, and a Web3 Ready certificate of completion when you finish. And here's how to get started. Visit proftanyaevans.com/beyond the JD. That's proftanyaevans.com/beyond the JD. And download the Web3 Ready for Law Students guide. And when you opt in, you'll be the first to get the full information on the program application process, including seat deposit options to lock in the best rate should you be accepted into the program. This is a well-curated cohort with very limited access, so the application matters, and so does the timing. Once seats fill, the next opportunity is a full year away. So visit proftanyaevans.com/beyond the JD, get the free guide, the application details, seat deposit information. That is your path into the future, because the future is absolutely now. So let's close this out. Here is where we land. This is the most consequential week in U.S. crypto policy in a decade. The Senate Banking Committee marks up the Clarity Act on Thursday. Section 404 is redrawing the economic architecture of stablecoins in real time. The banking industry has pushed back and lost. The bipartisan coalition has held. The political will is aligned. The Memorial Day deadline is the gating constraint, but the path to law is more open today than it has been at any point in the entire process. And meanwhile, in Hamilton, Bermuda, where I'm headed, the country that figured this out 8 years ago is running the model that the United States is still working out. As Premier David Burt said at Consensus Miami last week, the goal is to ensure that Bermudians are not just spectators in the future of digital finance, but owners, builders, and active participants. And in the United States private sector, Western Union, a 175-year-old company that taught generations of Americans how to send money to family, has put a regulated stablecoin into production. The future of digital finance is not a debate. It is a deployment happening in real time in jurisdictions and at companies that have stopped waiting for permission and have started building. I will be sharing real-time analysis from the Digital Finance Forum all week on my various outlets. So please follow me all around the web. My piece this week, while Washington debates, Bermuda deploys, lays out the full case for why this matters and what I will be watching at the forum. You can access that on LinkedIn. Also, be sure to subscribe to the DMD Digest on Substack for weekly insights at the intersection of crypto, regulation, and economic justice. Visit proftanyaevans.com for everything else, including the Web3 Ready for Law students and the full Beyond the JD ecosystem. And until next time, I am Dr. Tonya M. Evans, and this is Confidently Crypto, where you get the real story behind the crypto headlines and the strategy to act on them, from clarity to strategy. Stay informed, stay prepared, and stay confidently crypto.